Good evening, good evening, good evening. Happy Wednesday, November 20th. This is Mike with Alpha Shark and SmartOptionTrading.com. I hope everybody's having a fabulous week. And as we go into the last 4 or 5 trading days of November. So tonight I have a presentation for you guys, market chat, and a forward look. And what I really want to do here tonight, guys, is kind of go over my thoughts on the markets, where we're heading, and my thesis for everything. So you can understand where I'm coming from. If you want to get a hold of me, Mike at smartoptiontrading.com is my email. On Twitter at optionsmike, and on youtube.com optionsmike. You can get me there. Check me out. Smartoptiontrading.com is my website. So let's get through some of the disclaimer stuff. Day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, limited or no trading experience, and a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for loss of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin, and other capital requirements. Everyone watching this presentation adheres to all disclaimers at alphashark.com, smartoptiontrading.com, and myself, Mike Pisani. All right, welcome. Hey, Randall. How'd you like it? How'd I do on with Dale this morning? I love doing with Dale. Dale's had me back now again. He's going to have me back another time. So I really enjoy doing those things with him. Thank you. All right. So I've done 1,000+ presentations in my life, probably more. Put them together, and I always find that for what we all do here, I think a workshop format is always the best, guys. So I wanted to spend a little time doing that with you guys. This is interactive. So this is, I try to run these interactively. So you guys type your questions out and I'll answer them. I'll try to keep them going as we go along here, okay? So feel free to interact. And let's just jump right into it. I do want to do a couple things real quickly. First, a little housekeeping. One, that is actually me right there on the set of Fast Money, and this is my Twitter handle at Options Mike. If you're not following me, please do. I post a ton of stuff on here for free. Yes, I do have a subscriber service. I'm not out here to push my subscriber service tonight. Follow me on here. I put a bunch of actionable ideas and things going on. You'll never know what you're going to find on here in terms of I post option flow charts. Every Sunday I do about 50, 100 charts, depending upon how I'm going along on my look for the week. Follow me there. And if you're interested in learning more about me, this is my pitch. Come over to smartoptiontrading.com, click on it, and you can find out. I'm not really going to go into it tonight. Thank you guys for coming in tonight. So let's talk about the markets. I asked you guys a question here, and I said to everybody here, where do you think the market's going? 44% of you said up, 26% said down, and 30% of you said sideways. So as we come in here today, the market's had quite an interesting run here, right? And I sometimes think that the best way to do this is to look at a long-term view of the markets. And if you've never started doing this, sometimes it helps you to get things in focus. So this is a 5-year weekly view of the markets, guys, okay? And it shows you how we've run in this market. And you're like, okay, that looks okay, Mark. Let's go to a 10-year view. Okay. Not easy to see the individual candles, but I want you to get the idea. The idea here is that we came out of that Great Recession, right, in 2008, right? Came out, pushed up, had down, consolidated, pushed this big run. What did we do here? By the way, this is when I really learned how to trade, guys. And I'm going to tell you this as an honest answer. In 2015, when the market went sideways into the 16, this was easy. This is where I really learned how to trade. Does that make sense to you guys? When you learn how to trade in a market that is not just going up, up, and up every day. All right? I made a ton of money in here and gave almost all of it back in here, trying to do everything I was doing here. And that's when I really learned how to trade. Right? So you learn things, right? Learn from your mistakes. It took me a little while. You learn from your mistakes. Always learning. So then the market breaks out and we go on this tear, right? until January 2018 when we get that blow off type top and that push. So you're looking at this chart right now, guys. This is interactive. This here, does this look familiar to anybody? When you look at this chart, does this pattern look any type of similarities? This is not a spoon-fed type webinar, right? This is we're going to talk. I want you guys to think. I'm always trying, in my service, I'm always trying to teach everybody. So learning, teaching. You don't teach by getting spoon-fed. You teach by thinking, right? James, head and shoulders. Nope. Nope. Remember, look at here. We consolidated, we broke out and ran. In here, we consolidated, we broke out and ran. What have we been doing for the last 18 months? No, KM, we're done with the consolidation period. We're coming to the end of it, aren't we? Hey, JP, how are you, buddy? Long time. Right? Doesn't this look like we're breaking out of a consolidation pattern? Hey, Cheaton, can you guys see this? I'm really trying to help you guys here to look at things with a different eye, right? Breaking out here, right? Broke out here, breaking out here, broke out here. Okay, I'll do this slowly again, right? Broke out here after this, really long term. Broke out up in here, right? After this long-term chop. Broke out here after this long-term chop. Can you guys see this? Right? Consolidation. In the midst of all these consolidation periods, we had pullbacks, right? We had corrections. Here was your correction last year, that 20% correction that lasted for 20% all of what, 2-3 hours? We got one in here. We got one down in here, right? But for the most part, we haven't had a lot of corrections. So let's chat here quickly. Last month I came on, right? Okay, you're being cautious. I get it. You're looking for a blow off top and a correction. Yep. And everybody's talking about that, right, Bob? Every talking head out there for the most part, not all, but almost everybody's out there talking about that. Isn't everybody saying the market's going to dump? So I want to take you back to just before Christmas last year. Do you remember this dive here? Let's go to a daily chart. You remember this? Who came on my webinar a couple days before Christmas last year? Does anybody join me last year a couple days before Christmas? I'm not sure who was here or not. Remember I think I was the only person that said we were going to get a Santa rally? Right? I think, I'll go back. It's recorded. I'll record it and dig it out for you guys. Back into this sell-off, I was saying we're going to get a Santa rally. Now, I didn't think that we were going to get this. Yep, after the first. Yep, thank you, Tony, right? Okay, I didn't know we were going to get this massive backup. No, I am no way on that. But I remember there were people like Gundalach coming on saying we're going down 20% more from here into the lows. And I'm like, are you nuts? We've already dumped and sold off. So you got to look at things with a critical eye sometimes, guys. Try to tune out the noise. So bottom line, long-term chart. This market to me looks like we're just breaking out. My thesis here is that this market long-term is going higher, much higher. Okay, so what do you think my top reason for this market is going to go up and go higher is? What do you guys would think my top reason? China, kind of, John. We're going to talk a lot about China, interest rate. HD, the election. You just hit it. QE, nope. KB too, the election. Why the election? More than a Trump rally. Why? So here's a question: has any nobody wants a socialist. I'm leaving politics out of this tonight, um, as I always try to. You can't see the chat. I don't know. Um, do you think any incumbent president has ever gotten reelected if the economy went into a recession? No, right? So Trump's up for reelection next year in November, right? Um, what does he constantly tout his presidency on? The economy. More importantly, the stock market, right? The market. How many times have you seen him tweet, market at new all-time highs? Thank you, Mr. President, right? I can go pull it up. You can go look it up on his Twitter feed yourself, right? He bases it on everything on that. Okay. So, my long-term thesis is as follows, guys. This market is not done. We're going to run up, and we're going to run up into the election. That doesn't mean we're not going to get pullbacks, but if you're everybody out there trying to talk a recession, I would say, show me why. So in the last month since I came on, right, we've had this big rally. So let's go a little bit tighter. Okay. When I last did a webinar with you guys, it was back here in the middle of October. What has changed? What was bothering the market then that's gone now? I'll start you off. How about Brexit? Right? Brexit's been pushed away. Tony, you said the Fed. Yep. Great one. Tariffs. Correct. China, right? Uh, Impeachment briefly bothered the market before it finally realized that it just doesn't care. Correct? World news. We had the Iranian attack on Saudi Arabia, right? How about the big one that nobody's talking about anymore? How many nights on end did we hear about with bonds? What was it? Right? Thank you, Jeffrey, Randall, John, Tori, right? The inverted yield curve. Oh my God, how many nights did I have to sit there and listen to everybody talking about it? And every time the yield curve the yield curve inverted in the day, the market would go tumbling, right? Where's that now? What happened to that? All gone. So here we are today. We have a little bit over a month left in the year. Yeah. And the market is at just off an all-time high, right? Okay. We've had this beautiful move. So let's talk sentiment for a minute. Okay. Because a lot of you are nervous here. And I will be the first to tell you, I have some things I don't like about this market. I have a lot of things I don't like about this market, right? There's some things that are really bothering me about this market. That said, we have a clean breakout here, do we not? KM, I'll worry about end of the year tax loss selling as we get into December. Not here, late December, or even actually a lot of time that comes in more towards April, doesn't it? When the taxes are due. I appreciate it. I understand what you're saying, but not quite worried about this at that moment. All right. So we had this clean breakout in the markets, right? Beautiful. Okay. So let's talk sentiment. So the CNN Fear and Greed Index, this thing has been running hot. So, right now it cooled off a little bit the last couple of sessions, but a week ago this thing was up in the 90s. This thing was screaming hot. Sorry, 87. A week before that I was hitting 90s. This thing's been screaming hot. Okay, this is kind of a gauge of a lot of different things, but mostly tells you where the investor like you and me is in the market and how they feel. So it's been greedy. Okay, always concerned when sentiment's not in our favor, right? When we look at sentiment on StockTwits, look at the IWM. It's up there, right? 74% sentiment is bullish on StockTwits on the IWM. If we go to the SPY, and there's a reason I want to show you the IWM, by the way. 55%. Look at how it's cooling off, right? Okay, coming in. So let's talk about the Qs. 64%, right? So everything's kind of just going here sideways. We have sentiment's pretty high, a little higher than we'd like. I don't like when these things get over 70. Right now we're under on most of them. That's okay. So let's talk the VIX, and then we'll come back to this. So the VIX is a measure of what in the market, in theory? Volatility, fear, greed, right? This year, let me fix this up a little bit. This year, 12 has been the spot where the VIX has been reversing off of all year. Can you guys see that clearly on this chart? I post this chart every Sunday publicly for you guys, right? Talk about it ad nauseum all the time, right? This is the spot we've been reversing off of. Started calling attention to it late last week, saying, hey, we got problems here. It doesn't mean the market has to sell, but this is where they don't want to let it go under. Okay? When we start getting like this, what else is starting to happen here? When you look at this chart, what do you see? If you look at this chart and you look at the area where the VIX is now, what's going on there? I'll give you a hint. It's in blue. Not consolidation pattern. Not quite right. Nope. The blue bands, the blue is there is the Bollinger Bands. What do you see happening there with the, squeeze is a good word, right? You have a squeeze setting up, right? That's a good word. Cheaton, Jeffrey, some of you guys out there, Tori, right? Volatility is contracting. The Bollinger Bands are getting tight. What happens? I teach this to you guys all the time. When Bollinger Bands get tight, what is that trying to say? We're about to get what? Coiled spring. We're going to break, right? It doesn't tell us the direction, does it? It just tells us that we're about to get a break, right? Correct. Not up or down, just tells us we're going to get a break. Now, when you put your thinking hat on here, again, we're talking short-term and long-term, what's the direction the VIX is most likely to go in here? Up. Come on, keep it up, right? Up. Who doesn't see this? Why is it going to most likely to go up? Because 12 support, but also, does it really have a lot of room to the downside? Even go back to 2018, right? 2017, when we were in the single digits, the 9s and the 10s. It doesn't really have that much room down. Okay, so here's my theory on the markets. I wanted you to look at this, and I'll come back. Look at this. So put this in here. Let's go over a couple other things. Let's go over more sentiment, and we're going to come back to this. I hope you guys enjoy this format. I love talking to you and working with you guys and trying to teach you what I see and how I come to my decisions and how I form my thesis on the markets. This is the NIMOT. This is an oscillator that measures overbought, oversold. Okay? Right now, we're at negative 71 on the NIMOT, which tracks the New York Stock Exchange. So I want you to keep an eye on this. This I consider neutral. Over 200, we are overheated. Under negative 200, we're oversold. Over, and then I use 100 as we're getting hot or we're getting too soft. Does that make sense? Thank you, guys. Okay, so right now we're starting to get a little oversold. Not majorly, but we're getting close, right? Let's switch gears. Again, keep this in mind. I want you to look at this and remember this in your head as we move forward. The NAMOT, which tracks the NASDAQ. Again, I post these charts all the time. You can click on them when I post them, and you can save them. They update for you. Whenever I update the chart, it updates. Okay, negative 42. Now, the NASDAQ is almost always a little bit stronger than the New York Stock Exchange, right? That's because of what? KM, I post them on my public Twitter feed. I do most of my chart posts on Sunday. Add options, Mike. Because because of tech, right? Tech tends to lead. Tech tends to bounce faster. Tech tends to be stronger. So, but you see how it was hotter? So let me do a quick back here for you. Remember, you see how the NYMOT never got into this 100 area, and then where the Nasdaq did, right? It's just a change. What else here was boosting the the Nasdaq? What's been really what two stocks have really boosted this? The Apple and Microsoft. You got it. Now, Roku has no bearing on it, John. I love Roku to death, but Roku does not have any weight upon this. Roku is not a top 100 type stock. It doesn't have enough weight. It was Apple and it was Microsoft and it was some of the semis. Like, oh, which one have I been pounding the table on for the last year? Not Nvidia. Not Micron. Starts with an A. AMD, right? AMD, 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 AMD. Huge weight. Okay. So keep these in mind. So you got all this together. All right. So then we come over and I say, let's look at the put to call ratio. And I haven't seen this yet today, so bear with me. All right. Put to call. What I use this is as a sentiment. When we're above this 1.175, I consider the market to be a little bit too bulled up and to be careful with initiating long swings. Are you with me? When we're under 1, I consider the market to be getting bearish, and it's a good time to look for reversal, right? That means that the market's getting too bearish and to start looking for put on longs, and this is the neutral zone. So look at this chart. This was December 24th. Look at that, right? Look at some of these huge things. You can see how this really can play out, right? So right now the market is kind of in this neutral area. We're building a story here. So you guys understand where we are right now with the NYMOT, the NAMOT, and the put to call ratio. Anybody not understand this? Because we're trying to build a nice story for you guys here, where we're going with this. Okay. Last thing that I use. This was thanks to one of my subs, Chris, and we came up with this together. Okay. This is a way we track breadth in the market. And this is the moving average I track it against. Breadth and the market tend to go together. Breadth tends to lead, the market tends to follow. Make sense? So, when breadth is going higher, typically the market's going to follow that. When breadth is going lower, typically the market's going to follow that. Look at how this all has panned out here. Typically, it front runs it. Breadth here has gotten flat. I'm going to tell you, when you take a closer look at breadth, it's been absolutely putrid for the last week and a half to 2 weeks. The advanced decliners has been negative on most days the SPY is up. Okay? What does that mean? So when I say to you, breadth is bad, breadth is putrid, what does that mean? And the markets are up. I'm letting you guys go. There's a lot of stuff coming in. Sideways, narrow buying, pullback, calling for more, sentiment changing. What that means is that under the covers, while they are pushing the indexes higher, we are not seeing the market a broad rally, right? We're seeing a very narrow rally. Does that make sense? So I want you guys to think, the last week, how many stocks have been green on a daily basis? How many names have they been playing with? Volume, not so much necessarily, HD, right? But they're selling most names, and they're using, and a few names are propping things up. Apple ran every day, right, for a while. Microsoft, AMD, right? The banks had a big run. They've cooled off. So when you start seeing breadth getting like this, it's time to start taking notice, because the market cannot keep running the same names over and over again, can they? Right? There's cult names like Bob, you bring Roku up. Roku is a cult name, right? Roku does not respect what's going on in the market necessarily, does it? Roku kind of, but we're talking names that kind of respect the market. We didn't see a lot of names participating in this market. Look at charts like Amazon. Amazon's been weak. Facebook can't get going. Outside of AMAT and AMD, the semis have been struggling, right? Uh, the energy's been dead. Boeing is all over the place, Jeffrey. Great name, right? Yeah. Cloud software has been, getting, in and out, but all over the place, right? Retail stocks the last couple of days, other than a few, right? Target and Lowe's, the rest are done. The financials ran. They were great. But they haven't now been going. So what we have here is, I'm trying to paint a picture for you, is we have a lot of little warning signs coming in, right? Now, let's go to the daily chart. What has made this market so frustrating, and for me it's been frustrating, is it's gapping up almost every day, or if there's any weakness, they buy it right back. Is correct? There we go. Right? Every dip, we get China news, and 5 minutes later, they're bringing it right back up, right? This market, you guys, somebody said, we talked China earlier. This market wants a deal in the worst way, right? It wants something. It wants phase one. Okay. So here is my thesis, guys. Here is what I'm saying. Looking at all that sentiment stuff, RSI on the SPY. Notice where it was coming into this week. I posted this on Sunday on my charts, right? Look at that. Pointed it out. Screaming. How often? It's not often that we see RSI on the ETF scream, right? So we have a lot going on here. We have RSI screaming, we have divergences, we have breath failing, and you see this trend line I've drawn here? I'm gonna zoom in nice and big for you guys so you can see this. I drew this a couple days ago. We have an ascending channel, right? And since this day back here on the 11th of 10th, we have been riding the 8-day moving average, that gold line. Anybody not clear on this? We'll come to the Russell Jones. So my thesis is this. Until we definitively break this channel, you stay bullish. Okay? Today we played with it hard, did we not? Right? We played with it, but how did we close? Remember, it's always, how did we close today, guys? Even though volume was elevated, how did we close? Rallied back up, right? You break this channel, I expect we're going to get a fast and furious drop. Okay? But it's not going to be deep. Why do I think it's not going to be deep? Anybody have an idea? I'm going to go into details on it. I'm not leaving you hanging here. So, one, we're still in an uptrend. Two, there's a tremendous amount of cash sitting on the sidelines that desperately wants into this market, right? Desperately wants in, looking for a buying opportunity. Yep. Tons of cash looking to get in. We already, remember, go back to those oscillators. We're already on negative, right? We're already heading in the right direction, are we not? It's not like the oscillators and everything is up at these extremely high levels, is it? Right? We're already kind of a little weaker than we would normally be. You with me? So, again, my thesis is this market's going higher into the election next year. Any dip, I suspect, will get picked up somewhere around the breakout level of 302.50 or the 50-day around 300. And the reason why I say 300 is it's a very big psychological level, right? Because that ties to 3,000 on the ES and the SPX. Make sense? But 302, right? I believe you're going to get it here, you're going to get it oversold and go. Now, is this going to happen this week or next week? I don't know. And the only reason I don't know when it's going to happen is because what's next week, guys? In America. I know some of you guys are from overseas. What's next week? Thanksgiving, holiday, right? Thursday, the markets are closed. Friday's a half day. Not a lot of traders. Next week's a very low volume week. That said, we get a big dip, and I suspect we get a big rally off of it. That if we were to retest, I went over this with Dale. If you retest 302.50 and hold it, what would that be? Lewis, I use Trade Alert. I've customized it to my own needs. Bullish, right? Anytime you break out and you come back and retest that, it's very bullish, right? Because what was resistance is now support. So my theory on this market is this, is that sometime before the end of the year, probably the near future, we're going to get a dip. And I believe any dip in this market, and this is my plan of action, I'm not telling you what to do, I can't tell you what to do. My plan is to aggressively buy any dip and look for the market to scream higher after that, based upon everything I've showed you here tonight so far. You know, and for me, brought up the SPY. Here's another one I would keep my eyes heavily on. And the reason is this, is it's been lagging forever. So when you talk this market, oops, wrong one. IWM is considered a what play? Dip, maybe a Santa rally after that, might even not the, I don't think this is going to be a long sell-off what it is. Right? IWM, look at this defined channel here, right? You look at this chart and you say, ah, Mike, this is hideous. Well, here's my thesis on this one. 3-year daily chart. Come on. All right. Since the January 18 top, this has been lagging the markets, hasn't it? If it breaks over 160, you just nailed it. Don't you think this one comes up and starts to get some legs at that point? And guess what they've been buying calls on over and over again in this market? Expands breadth as well, right? Rotation. So for me, guys, I'm going to keep this very simple here for me. I like this market on a dip. I don't like how this market's trading right now. I hate how we're trading on nonstop rumors and news and whatever it is. I'd love for us to get out of there. That's though what we have here right now. That's because of our president, right? He's changed the game. Love him, hate him, it's irrelevant. He's changed the game. There's no right or wrong here. I'm not here to talk politics with you guys. He's changed how the game is played, and everybody's playing along with it now, right? So this is the market we're in. This is the hand we're dealt. We have to accept this. I don't like it. I'll be the first to tell you I don't like it, but this is where we're at. We have to accept it. So that said, I'm looking for the market to push up. Any dip should be bought. You should be picking names you want to own here. In the short term, I'm looking at possible plays on volatility like the VXX puts, or playing on Amazon specifically, which has been acting bad, or playing some of the leveraged ETFs, right? Like the SQQQ, stuff like that. Yeah. Now, you're right. If China deal collapses, all bets are off, right? I'm not gonna mince words, right? right? If the China thing just completely collapses, we have a whole world of trouble, right? I just don't think it's going to completely collapse. I think it's going to have some issues. I think it's going to go back and forth, but I think at some point in time, at the end of the day, we're going to get that phase one done. Yep, you got the Hong Kong bill that's going to play here. You know, the market's looking for reasons it's getting it here, right? Where are futures at tonight? Futures are right now, they were red last I looked. I haven't looked in a little bit. Yeah, we're down 112 on the Dow. Okay. It's not like we're dying here. We're down a little bit. We're getting a little bit of weakness here. We'll see where we are in the morning. This is what I always say to you guys. See where we are in the morning. Okay. For me, I have nothing but long-term positions and one short-term position in Disney, which I have a very small position on at this point. My thesis on Disney, by the way, is that Frozen's going to propel it higher next week, for what it's worth. All right. So, any questions on how I feel about the market, what my thesis is here, and how I'm thinking? So this is where I open the door to you guys. Happy to hang out with you guys for a little bit. You want me to look at some charts, put some names out, be happy to pull them up and go through them with you. And by the way, I appreciate everybody taking time out of their day to join me here on a Wednesday night. It's nice to see so many people here and have everybody in here. We'll do another one before Christmas, probably about a week or so before Christmas. Yeah, I think it's recording. If it's recording, I'll always post it. Okay. So do we short more retail names? I think retail names you go very, very specific on shorting. I wouldn't be shorting Costco or Target here or Walmart off of these, but names like Kohl's and Macy's, I think if you after Macy's has earnings tomorrow, we'll see what they think there. Boeing. Boeing, guys, to me is a disaster here. I don't know how to trade this anymore, David. How you doing, by the way? This name is all over the place, nonstop, chops around. Love Boeing, but really needs to take out 380. Until then, it kind of is just chopping around here, news to news, and I hate how that trades. So for me, I'm kind of avoiding it right now. It's hanging in, it looks okay, but not acting particularly special here at this point. Let's see, OLED. Beautiful earnings on this chart. It's been going sideways since then. So you got to sit tight. This name has a bad history of doing that. You got to wait for a break at 205 or buy it off the 8-day on a dip if you like it. That would how I would handle it. Obviously, if you have a big gap and go. I think it's a pretty chart though. I have it on my radar. I have a notification on it that goes off throughout every day. I take a look at it, but it's just not giving me a reason to get in it. Disney. So I have December 150 calls on Disney. I sold most of them yesterday. I have a very few left, and I'll add. I think this is going higher, but it may hang here for a little bit. I think Disney here, what's going on with Disney Plus is beyond big, and it's going to hurt. What name? What name? Netflix. Netflix, I think, is in trouble. Now, Netflix is trying to bounce. You have a series of what here? Higher lows, right? Creating an upward channel here. Takes out the earnings high this thing may run. If it gets above 310 and the markets hold in, I think it's going to try to run to 330 in the 200-day over the next month or two before earnings, as it's getting a little bit of a reprieve. Make sense? Target, what a day in Target. I think I'm the only idiot that didn't make money in Target today. I bought shares. After getting up on it nicely, they came in, they hit me, they took me out, and then the stock took back off again. I would wait. There was a lot of buying in December 130 calls. So the way you trade a name like this is, one, you have this gap at 118. That is your, if it gets down there and holds, you take a long off of that, or you take a long on the break of today's high at 127. The problem with Target is, if you look at earnings, it tends not to do much after a couple days after earnings. It tends to go sideways, so be careful with it. Loves to chew premium up. Jack as in like Lewis Jack in the Box. They had earnings last night. I don't trade this name, Lewis. Chart to me is bleh. I don't see a lot here I really love for me. I wouldn't want to be involved in it. That whole food sector right now, that restaurant chain area seems to be drying up. Al, LK. So LK, you got a big time call buying on it again today. It was taking off when the news hit, and it got hit because it's a China name. So it has to get back above 28 area for it to go. Above 28, it probably goes and tries to take out this high, which is now the all-time high on it, 30.40 area. It's just consolidating. The couple of sessions, maybe it goes. If China get news, it probably goes. It is a China name, Al, though you got to be careful with it. All those names have to be careful with it. Oxy had a big move today. Energy names got a bounce today. The oil numbers weren't all that bad today, but all it is a dead cat bounce here. Unless we get a China deal or there's some strife in the Middle East, guys, I don't see a lot of power in oil. I was on TD Ameritrade Network on this on Monday. We're talking about energy. For now, I would just be careful with these names until we get something more to go in with them. Sting and CLDR, STNG, Shipper, nice break, right? Clean break of this downtrend, gapped up, held. As long as it holds that downtrend, you look for a long and back move back up to basically 3650. Chart looks good. Money coming back in. MACD crossing, right? Nice break of this downtrend it had here. I like that. Good look. CLDR, I don't know. I'm going to tell you today there was a lot of flow in it, and it was very hard to interpret exactly what they're doing. It gave a nice move late today. It exploded higher. There was a lot of puts in it. There was a lot of calls. It was very hard to tell what they were doing here. Got to check open interest on that name tomorrow, to be perfectly honest with you. But obviously, this name takes out this high, right? 963 area. It likely tries to push up. You got a gap up here that can be filled up to the 1058. And then maybe it tries to come up here to about 11. All right, guys, everybody's posting the charts over and over again, so I'm going to start switching through these. We don't have a lot of time left. NVIDIA tried to break out today, got caught up in everything going on here. Okay, so keep an eye on it. Again, 212.50, 213 area. Watch the 213.50. Above that, it may go. Watch this name. If this market decides not to sell off, they came after this name today. It was a name they wanted. It looked like it was trying to go. Look at money flowing back in. I'll be the first to tell you earnings sucked. Guidance wasn't good, but they announced more buybacks. Guess what? Whenever you announce more buybacks, guess what happens? You go up. So probably going to go higher. 220 has been my target for a while on that one. Lam Research, LRCX, I think, right? Yep. Beautiful earnings, great move, consolidating here. Watch it here. As long as if it holds the 21-day, that would be strong. If not, your next level would be down here at 252, 20 bucks lower. And then look for, if it wants to get strong, takes out 285 and runs. Very easy. When you have a move like this is how you play it. You put boxes on it. Right now you have a box. You could put a box around 267 up through 286. That's your box. That's your range. Try it off the bottom until it breaks out, until it can go. Twitter, unfortunately, Sampa, Twitter to me is in a whole heck of a lot of trouble. I love this name. I still own a couple hundred shares. Just, it cannot bounce. I think this is overdone. By the way, the news tonight, Google is joining Twitter, and they are getting rid of a lot of the political ads. I think they all realize this is problematic. I think this is overdone, but it is what it is. I also think Jack needs to choose one company. He cannot be CEO of both. Right now, as long as it continues to hold around this 28.50 area, it stays in the game. If it loses that, you probably get a quick move down towards 26, 25 area. I still like this name long term, but right now it's in the penalty box. And until it comes out, there's nothing to do here. And so far, it's not coming out. AT&T, couple downgrades. Everything came out of it here. You know, this name had a huge run. You got activist investors in there trying to bring out value in it. It's a battleground stock at this point. You know, you look for it to hold right where it did. As long as it continues to hold around this 3650 area, it probably can move back up, but you had a big hard move down. I'd be careful here with it. Google made a new all-time high and then came in. Nice tag and hold and bounce off the 21 today. That shows some strength in this market today. As long as it tries to hold here, may try to rebuild. This is one of the few tech names that's acting well. Earnings were good. I like the way this one looks. Earnings were good 2 quarters in a row. Looks good. I think this, as it holds in, the market goes. This one takes out the new all-time high. This one's acting well. This is one I'd look to buy on dips. AMD, John. AMD, I'm not in it anymore. Today was a tough day. It is hot beyond belief. It's broken out of this 13-year plus, 13 years it took to get back here. It's got room to run. I would try to buy dips. If you can get a dip, I'd buy it. But what you have to love is look at that move. It took that out. Kind of reminds you of Twitter. I'm not of Twitter, of NVIDIA a couple years ago, right? I love AMD because they're beating up Intel and they're beating up NVIDIA simultaneously and taking them on. Well-managed company, great CEO. Love this name long-term. I cannot say like it up here. For me, I got to get a dip. Let this cool off. A test and rehold of 37.35 would be very, very bullish. Nugget, again, more, Nugget, if the market dumps, I would look at gold and Nugget. Why? Because Nugget likes to run when China news. You got a downtrend here that is pushing in. I'll give you a quick, right? You can take it off of here, or you can take it off of here, however you want to take it. You got a downtrend right here that it's pushing up against. See if it can take it out. So Nugget trying to wake up here. If the markets sell, Nugget is something that definitely would be in play, something I would look to in this market. They like it, especially on bad China news. Gold always runs. Work. John, Work has one big problem with it. They didn't do an IPO. They did a direct offering. When you do a direct offering, you don't have the support of any of the big banks propping it up. It shows. At this point, it has to change character. Change character means it needs to break out at this downtrend. It needs to show something. I'd wait until earnings at this point on it for what it's worth. For what it's worth, Tim, I'm not a fan of the pot stocks. I know CGC had a huge day today. The reason I don't love these is they're all coming out and saying they completely overestimated demand. They're all hurting. They're all not selling well. I just don't know here. They may run, Tim, but I don't know what the catalyst is when you can buy it cheaper from your local guy or make it yourself. So all these I'd be extremely careful with until the market turns and they want. Snap. Hope I'm not going through these too fast. Snap, this name is always tough. This name is hard. I hate this name because it always gets me. Pushes up, goes over 18 on earnings, and then comes right back in. Holding the 200-day. As long as it continues to hold on 200-day, it's in the game here, then at 1344. It had a very nice run off of that 5 area. Yep. Maybe just consolidating that move. I think I'd rather play with Facebook if it can break here above that 200 level, to be perfectly honest with you. Visa, somebody's asking me about. Visa, beautiful move in this. You had December 187.50 calls being bought hard yesterday, some 185s. If you liked it yesterday, you got to love it today on this dip. Breaks above here. I think it does go and take out that new all-time high. One of the better looking charts out there right now. UNH, I'm still not sure I understand why this got this huge move on Friday based off of Trump's plan, but I respect it. Big move in all of these. Flagging up here hot. I wouldn't touch this up here. If it reconnected and held the 8-day, I would try it off of there. Currently, it's at 266.50, but this will continue to move up. Visa unit, TLT, bonds. You know, again, market comes in, bonds go. You got finally got a little bit of a break of this downtrend here on bonds. You can see it very clearly defined right here. You got a gap up and go. If we get selling pressure, bonds will be good. Look for bonds to get one last lift in it. I think Dale actually was talking today about that, about wave 5 and one last big blow off. Tesla, no feel on Tesla here, David. Tesla has their truck event tomorrow night. Today they gapped it up $5 and they sold the hell out of it all day long. Looks good, run a long way. It's hot. They didn't want it here. I'd be a little bit careful with it up here. I'd wait until after the truck event, other than a scalp tomorrow. Does that make sense? So if you saw something you like tomorrow, give it a shot. Nike, nice move up, pulling back. If it held at 8-day here, I would try it off this 92.50 area if the markets remain strong. Somebody last week, it might have been JP Morgan or Morgan Stanley, put them on their top, one of their top names for the end of the year run. So just trying to give you some of that. What else we got here? Sorry, I'm working through these fast, guys. You guys are throwing tons of name at me. I don't. Rust RH. Restoration Hardware last week got the Buffett position, pushed, pulled back. Nice candle today. A lot of shorts in this thing. If it takes out 193, I think this thing tries to run. I would definitely have this on my radar. May not care about what the market's doing. That's a nice thing to play. FedEx and UPS look like crap. Transports aren't looking good. FedEx has been in the doghouse. Can't take back the 200-day. I've talked about this ad nauseum on Thinkorswim on TD Ameritrade. Not looking good. Weak here, even though seasonally strong. UPS a little bit better, but not acting as well. At least this one's holding in. UPS is the one I'd play. And this is, you know, any hold here, the 50-day, I would try UPS. I wouldn't trade FedEx until I see a change in character there. Kohl's, that was ugly. Lewis, it really was. I mean, that was an ugly report yesterday. I talked about this on Monday on TD Ameritrade. You know, this way moves big. You had this big gap it could have filled. Ugly, ugly, ugly. Now you have a big gap here. I'd avoid it right now for me. I would play the other names. I would play Target, Costco, Walmart, Lowe, Home Depot, TJ Maxx. I'd play names like that. We did Tesla. We did a lot of these names. Let's looking around here. Tesla, Square, love Square. Love Square long term. Did not get into it this week. A little angry at myself. Pushed above their earnings high. My next thought on Square is it's going to get into this gap here, right? It pushed into it today. That gap fills all the way up here to about 70. There's your 200-day. That's target 1. And then look for it to take to there around 71. That'd be target 2. Any dip you buy Square. I think Square is turning the corner. This stock's been under consolidation now for the past 4 months. Love that one. JWN has earnings, KM. I can't talk about a name that has earnings. I have no clue what they're going to do going into earnings this week. Sorry. I could talk to you about, I don't have the numbers in front of me, so I'm going to leave it at that. INTU. Nice climb up here. I don't know enough about this name. I don't trade anymore, but if it takes out this level 275, looks like it wants to climb back up. I'm not sure how this name makes money, but it always seems to run back. What else we got? Uber today. News after hours. CEO bought 250,000 shares valued at roughly $6.69 million, HD. So they knew it, right? How do they know? Who knows? But they knew he bought them. Uber, you had a big move today. You had call buying. So if this name wants to go, first stop is the 21-day at 28.59. Then you watch this 29.37 and see if it can get up and start filling this gap. For what it's worth, I think Uber and Lyft are bad names. I don't love them. I don't stay in them. You trade them. You get in and out of them. And that's my thoughts there. Last one I'm going to do is going to be pins tonight. This name has been beaten up. Oops. Bad earnings. Good earnings here. Couldn't hold. Gave it back. A lot of selling pressure. All these recent IPOs, you're in price discovery mode here. May go lower, may go higher. Not sure. Watch it here. You got price discovery mode. So guys, I hope you guys all enjoyed tonight. Thank you for joining me on this Wednesday night. So give some thought to what I have to say. Think about how you want to trade the markets moving forward. Pick your positions. Have a great rest of the week, and I will catch you guys all shortly. Thanks for joining.